It is true, history does not repeat itself, but it surely rhymes. And even though this current cycle looks quite different to prior cycles, we can still draw some parallels that give us an idea of where we currently stand, what the current risk versus reward really is. I think this indicator here is very useful. It looks at how much the market is currently in profit relative to the risk, relative to the volatility. It's called the market value to realized value Z-score. So we look at the current market cap, that's the line in black, and we look at the realized cap, so the average cost basis of the market, that's in blue. When the price is currently below the realized price, we tend to be extremely low, and it tends to be a good buying opportunity. When we are above, things are a bit more complicated. Now the Z-score looks at the current profit relative to the cost basis and puts this in relation to how volatile the price is, to how much it's going up and down. Currently we are not at extremely elevated levels, as in we are not in the red area. However, we have been at a similar point in July of 2019, where we subsequently went down to the realized cap again. This was a drop from 22.4 billion down to 90 billion. So the Bitcoin market cap fell by roughly 60%. Let's work with the worst case and we suddenly go down from here. That would imply a Bitcoin price of roughly $50,000. Now, I am not saying that that's going to happen. I'm simply just pointing out the worst case, at least if Bitcoin's history is any indication of the future volatility. Here's another useful metric. This is the realized HODL ratio. So this measures how much short-term trading is currently happening versus long-term holding. To be a bit more specific, we are looking at the transactions that happened in the last week versus the last 1 to 2 years. If this is high, there's a lot of short-term speculation. If this is low, there's only long-term buying. We of course want to buy when the tourists are out of the market and when it's only long-term holders that determine Bitcoin's price action. Currently, we are slowing down. What I find fascinating about this chart is that even though the trading activity declined, so there's less speculation now in the market, during the same time, the Bitcoin price actually went up. It went from 73K to our current price. So isn't that fascinating? As in, we don't necessarily have the strong link anymore that the market always has to further heat up as we progress. We don't necessarily have that direct link anymore that as the price goes up, the market heats up more and more and then has to implode. The price of Bitcoin appreciated while the market actually cooled down. A similar way to look at the same thing is to see how much net unrealized profit there currently is. So how much is the market currently in profit? How green are currently the portfolios for the average market participant? When we are in the losses, then this blue line is in the green area. That's the best time to buy. When we are in red, then there's a lot of net unrealized profit and that profit might get taken. That might be the peak of a bull market. But again, we have seen Bitcoin's price going up while the net unrealized profit tended to trend down. Another sign that the market longer term is rather healthy. It has been roughly 1.5 years when the whales, the long-term holder diamond hands, sold Bitcoin. That was over here in March of 2024. Many long-term holders sold for 73K, and that was where we saw a temporary peak in the price. We subsequently went down by 54K. But since then, again, the long-term holders aren't selling. The value days destroyed multiple is not going up. The whales that tend to just buy and hold, they continue doing so despite the price appreciation. What's fascinating is that the movements for Bitcoin don't necessarily one-to-one translate anymore for the altcoin market. We have seen now Liberation Day 2.0. We have seen Trump again picking a fight with China, imposing 100% tariffs, or at least threatening to do so. And while the first Liberation Day tanked the stock market, this time it was the altcoins, the overly levered altcoins, that saw the crash. This here is the Trump meme coin. The Trump meme coin went down by 40% in the matter of just 8 hours. Many longs got liquidated on the perpetual futures market, so on the bets on the Trump price. That then caused massively negative funding rates So the shorts had to pay the few remaining longs to continue betting on falling prices, and the open interest fell massively from 340 million down to 160 million. It was cut in half. And so Bitcoin's drop during that time was rather modest because Bitcoin doesn't have as much leverage in it. The market makers, of course, are the beneficiaries of the altcoins quickly crashing. This is the hyper liquidity provider. So everybody can now become a market maker by investing into hyper liquid. And it took the protocol 1.5 years to gain 80 million of profit. And then within a single day, when the flash crash happened, another 42 million got added to the liquidity providers of that protocol. And of course, the books of Binance, of OKX, etc., they all look the same. They made money with that crash. But Bitcoin behaves very differently. Let's have a look at how much Bitcoin could come down. We've already made the comparison with the realized price and got to roughly 50k. Here is the balanced price, which was a somewhat reliable floor in the past. That's currently at 42k. Now, I don't like this indicator as much because sometimes it tends to slightly go down. We've also got the average cost basis that has a similar problem. That's currently at 55k. And at the end of the bear market, we actually did fall below that realized price several times. Here's probably the best of the models, the cumulative value days destroyed. It's an indicator that just monotonically increases, which also was a very good bottom marker for prior bear runs. And that's currently at 41k. So somewhere between 40 and 55k is probably the strong buying zone for Bitcoin in case we do see bearish momentum from here. I don't expect that we're turning around into bear mode, but again, at those kind of prices, it definitely makes sense to buy back in. Let's have a look at the top indicators. There is the delta top, which I don't like as much because we didn't hit it in 2021 and subsequently we still had our 60-70% crash. Here's the delta top, which went a bit closer to the price, still didn't hit it, and it has a disadvantage that it comes down every now and then. By the way, the top cap is currently at 593k, the delta top is at 265k. But here's my favorite top indicator, the terminal price. It did hit the prior peaks. It increases monotonically and it's currently at 263k. So that's the potential upside. We could fall to 40 or 50k. We could go up to 260k. So really overall, the market is quite balanced. We continue to see money inflows. We see that the stablecoin market cap is going up and we have seen a lot of leverage getting flushed out of the market just recently. I think it does make sense to continue to be invested in crypto, especially into Bitcoin. But of course, for any altcoin bet, it's important to have some kind of a hedge because the leverage can be dangerous, as we have just seen a few days ago. Now, most people try to beat the market by reading the news or by following the narrative of the day, but I don't think that that's a good approach long term. Most people just follow their gut. I think it's better to use statistical data analysis. Try to figure out what kind of rules worked in the past that might continue to work in the future. So you might know about this. I have backtested moving averages for Bitcoin to try to find out when are we bullish, when are we bearish. It's a trend following strategy. We buy whenever we are above the moving average. We sell whenever we are below the moving average. Now I've backtested all moving averages from the 2-day all the way to the 200-day. And the 125-day simple moving average and the 44-day simple moving average are the ones that historically work the best. That's the two moving averages we see plotted over here. So the 125-day is the line in turquoise, the 44-day is the line in orange. Now have a look at the historical performance versus buying and holding Bitcoin. So we are betting on rising prices whenever we are above. We're betting on falling prices whenever we are below. This is the 125-day. Buying and holding Bitcoin would have given us this performance here in white, but the backtest gave us the performance in turquoise. Here's the same for the 44-day simple moving average. We can see, first of all, that we outperform long term, but also that our volatility is lower, as in the drop from top to bottom is less compared to buying and holding Bitcoin over the same time period. Now, when we've got an approach that tends to perform more and still is less volatile, still drops less compared to just buying and holding Bitcoin, why don't we lever this up? So I tried to find the optimal leverage. If you go long, the best leverage is 2.75. If you go short, the best leverage is just 1x. If you have the same leverage for both directions, long and short, then 2.25 is the best. But in general, I think it's better to have different leverages to go harder on the long than on the short. So this is the 125-day simple moving average if we only go long. We never go short. So whenever we are below the moving average, we're just in cash, we're just going sideways. And here is the short side. So we never bet on rising prices of Bitcoin at all. We're only betting on falling prices. And of course that underperforms buying and holding Bitcoin. But still, it shows us that even though in a long-term appreciating asset, if you can only bet on falling prices, we can still make some return. And so let's say we use the 44-day simple moving average, but we don't just have 1x leverage. So that's that. But instead we lever this up with 2.75 on the long side, with 1x on the short side. This is much better than just going 1x. And again, this is a logarithmic scale, right? So each horizontal line here is at 10x from each other. So that's my preferred medium-term approach for Bitcoin. I just look at where is the price currently relative to those moving averages, and then I position myself in the long or short direction. And because this might be cumbersome, this might be complicated for a few people to always enter and exit those trades, I've also opened up a capital trading pool for the premium members. They can simply just deposit capital and then I will execute that exact strategy and I won't deviate from that strategy. So if history is any indication, we might get performance that looks similar to that over time. At least that's the idea. We don't want to just follow the news or act based on gut feel. We just follow rules that historically worked well. This was a very quick rundown, but there's way more details in the tutorial section of Premium. The link is down below. It's bitcointrader.com. But I'm also sharing my personal view on the market regularly. So every 3 to 4 days, I publish a Premium update video where I share what kind of trades I open, where I share what kind of positions I take. There are more details regarding the strategy in Premium. They're dedicated videos for that. There are also dedicated videos that explain how to actually run the backtest, how to make those backtests yourself, if you want to do this maybe for Ethereum or for any other crypto asset. And so here is the Bitcoin strategy moving average vault. So that's the trading pool. You just deposit some money into that pool and then I will execute those trades automatically for you. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you do not like Premium, just message me within 1 week and I will refund you 100%, no questions asked. A link to Premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.